Good evening to everyone. Good evening, ladies and gentlemen. So we begin and let more people join as and when because time is already
Sure,
there to
sure,
start.
sure, sure.
And the topic today is separate insurance from investment. Today, over to Mr. Sandeep Kar. Sir, the stage is yours.
Thanks, Vanaji, for such a wonderful introduction. The whole idea is to separate the two concepts of insurance and investment. In our country, insurance is almost non-existent. Insurance comes packed in the form of investment. That there's the fallacy, and though insurance products are there for various reasons, they are not come brought to the fore, and we often, most of the time, we end up buying an investment product which is packaged hybrid, some investment, some insurance. And we'll just shortly, briefly talk about the issues involved in that process. We'll not go in depth on any of the subjects. We'll just touch base and go. This more a chatty session and other session. And should any follow-up communication is needed or any concept, one can reach out to Vana sir or to Sukun, and I'm always there in part of the community. Okay. So we break our slide, the show today in 6 parts, starting with an introduction, then why do we need it, and then insurance versus investment. What are the common mis-selling tactics and how to stay away from them, that is making smart choices, 2 case studies, and then Q&A, and we end there. So why this matters? Why is it for seniors? Because seniors are at a point in our life where you cannot make mistake with your money because you are mostly on a fixed income route, and any expenditure you do, you should think carefully to make the most of it. Mis-selling is a big problem at this age because you cannot make a mistake and come out of it. In an early age, if you make a mistake, you have enough time to come out of that. The reason I'm saying this and the reason I brought up this topic is that I know a very large number of senior citizens, particularly pensioners, who have bought insurance thinking they're buying fixed deposits. It is in vogue nowadays that insurance is sold by bankers when they come to your house or meet you as a relationship manager with whom you have been used to investing fixed deposit. And one usually associates banking with investment, and with all the long paperwork, fat booklets, endless pages to sign, hardly anybody reads all those. They basically ask the other person on them, just tell me in gist what this means. It depends on the individual's understanding of ethics as to whether he takes you through the entire process and tells you the way it is, or he or she tells you the way he or she wants it to you to hear. So protecting your investment savings is very, very important when you come closer to the senior age, golden age. You just can't make this kind of a mistake. These are actually not only mistake in terms of number of mistakes, the mistake translates to large amounts of money. It's not small investments. So common financial markets that elderly or anybody else for that matter, not only elderly, they make mix insurance with investment. Insurance is about protecting from an uncertain event. It could be life, it could be accidents, it could be something which there is a probability it will happen. Life, it will definitely happen, but or medical or accident may or may not happen. But if it happens, how it protects not only him or her, the family, to take care of the person who's gone through that experience. Whereas investment is not that. Investment, your vision is that you are around and you want money to grow. Simple thing, you want money to keep on growing as fast as possible in a secured manner. Insurance is not that. The concepts, the philosophy between insurance, philosophy between investment are different. The other mistake that one happens apart from mixing these two is that you fall for sales pitches. That is, you don't read your documents yourself. You also don't give it to a trusted member in the family or a friend. You basically trust that person who comes across, and you ask him to interpret all that is written there, and he interprets. If he's a great guy, he interprets the way it should be interpreted, and then you may take a judgment call. And in other cases, missell happens. So again, I'm mentioning insurance provides financial protection against risks. An investment aims to grow wealth over time. There's a single goal in investment, nothing else, just to grow over time. Key difference, if I mention in terms of purpose, one is insurance is risk protection and investment is growth in wealth. Returns, insurance should be ideally they are very low returns or should not have any return as such. It's related to your death. If something happens, the family to take care, or loved ones to be taken care. Investment is market linked or very high for returns. Flexibility in insurance is usually very limited. Investment, there are high. You can do all sorts of things in an investment. Flexible. Tenure, usually insurance is a long-term commitment, whereas investment could be short-term, could be long-term. So how investment, how mis-sells happen is that when number one is when agents push insurance as an investment product. A very popular, most popular product is money back policies. That is, you buy a policy. Should something happen to you, your family will get some amount of money. If nothing happens to you during that period, you will get back money. Sounds very good. So if I'll get both, if I am alive, I'll get money. If I am not alive, then also my family will get money. But actually not so, because if you put the premiums that is there to buy such a policy, yearly premium, instead of putting that money in this policy, if you break it into two parts and buy investment and separately buy term insurance means you don't get back anything. If something happens to you, your family gets. If nothing happens to you, money is gone, which are very low premium. You have to pay very little amount of money for those policies. Those policies are almost never sold. The agent or the person who comes almost never talks about it because the commission the company gives is very, very low, almost very low. So you buy insurance as an investment. Second fallacy is that saying that the premium is like you're giving a one-time premium. It is not to be given next year. So it is like an FD. You pay that lakhs of money this year, and after so and so year you will get 3 times, 4 times, whatever fancy talk. But the next year comes and the premium date comes, you get a call from the insurance company saying that you have a premium due. Then you say, hey, how come? I bought an FD, not an FD, I made a deposit, and against that I'm going to give something return. So one time deposit I made, I'm not supposed to pay again. And then you search for the person, he has changed banks probably most of the time. Usually people who missell do not stick to their jobs, they usually move around. And then the company says, no, you have signed all those documents, which you have actually. So then, yeah, one has to go through recordings of phone calls. It's a long battle. It's a very arduous battle. And these policies are usually very expensive. It's not about few thousand, it's lakhs and lakhs of rupees. A person is deposited because he or she thought this is like an investment. I'll get back money and so date. Added attraction is that it is also covering me in case something happens to me. Whereas it is not so. Over promising returns on life insurance policies. Life insurance returns would be very low because it is not possible to give a very large amount of return. Large amount of return comes when you invest, the company takes the money and invests in stock market. Stock market means there's a uncertainty of things happening. So usually by regulation, insurance companies, the premium that they take for life coverage should not be going to those places. It should be going for buying, investing in government of India securities where the interests are low. So in turn, when they give back the interest to you, it will be low. It will be very low. You cannot compare that to investment. It will be unattractive because the purpose is different here. Purpose is to cover your life. Something happens, your loved ones should be taken care of. It is not about growing growing your investment amount. Selling long-term policies unsuitable for seniors. Okay, this is easy to understand. The high commission products with hidden costs. That is, the person will generally, if he has 100 policies in the company, he will focus on 5, 6 policies, which is having some schemes in the office of return, all commissions, incentives, and not looking at it from your point of view, the buyer's point of view, but from the seller's point of view. So you have to ask him, what are the policies you have? Give me the list of all policies, compare one policy to the other, and you have to probe, you have to ask. Red flags that you should watch out for. One is guaranteed returns. Almost impossible to have a guaranteed returns. It is often the person who's selling the insurance says guaranteed returns, but when you tell him that you gave it to me in writing in your company letterhead or in an official mail, then he would not give it. If it's coming from a competent senior resource, you would not be able to put it in writing. So always ask him that whatever you're saying, fine, just get your senior, somebody you can connect with at the office, that some senior person with his designation, his employee ID, to write it on mail, that this mail or letter, that this is what he guaranteeing. It will never come. Complex policies, anything which you do not understand in simple 3-4 sentences, don't get into. Policies should be easy to understand to both parties. Very complicated, this rider, that rider, if this happen, that will happen, if this happen, then that. Very complicated, move out of that, don't get into it. Other tactic is that act fast. This scheme only is there for till Friday. By Friday, some scheme is going on, I'll give you an advantage. So this tactic works in many sales pitches, that is act fast. You take your time. Usually there's a high, in all these missile policies, there's a high surrender charge if you want to exit. Always keep an option open. You never know how things are. You should have an option to come out of a policy. What are the charges? You should ask all this. The kind of policy that I had mentioned earlier, almost you cannot come out of it. Your money is gone. Where you have made an investment and premium thinking it's a FD, but actually it's a first year premium. You say, okay, I don't want to give the money back to me. Nothing will be there, because the first 3 or 4 years is lock-in period. You cannot come out of the policy. So don't get into such policies where you can come out of it. But these discussions must have be had before you buy the policy. Once you've bought it, then you've signed all the papers. 30, 40 pages signature. So now, from what I've told you, if you have imbibed all that, so you are now going to make smart choices. Clearly define your goal. Do you want protection or do you want growth of your money? If you want growth of your money, you invest. If you want protection of your life, in the case, in your absence, what will happen to your dependents? You go for insurance. No point mixing the two. All insurance policies have a beautiful product called term life. That is basically life insurance. Just if I buy that policy, if something happens to me, my loved ones will get money. If something does not happen to me, nobody will going to get any. Fine. These are very low premium, very inexpensive policies. Use insurance for protection and investments for returns. Don't mix these two. Read the fine print before signing any policy. Nowadays, policies come with lots of disclaimers, asterisk marks, fine prints in all the entire book. Now it's become a booklet. It's no longer a few pages. Please go through them or ask somebody else who understands this to go through them. As the 4.4 says, consult a trusted financial advisor, not just an agent. Fortunately for you in India, the regulators have woken up across the spectrum for all financial services products, particularly for insurance. And they are saying that registered financial advisors are there, which is a profession now, and not just an agent. Person should be known to you. You should be having some sort of reliability, like you used to have trusted family doctor. Nowadays, you should have a trusted financial doctor also, and a lawyer. These things are needed. Will take care of your interest. Look at everything from your point of view. Now, what are the questions you should basically ask? If summarize all that we have discussed, 5 questions. 1, is it an insurance product or is it an investment product? What are the costs, charges, and returns? Is there a lock-in period? Lock-in period means you are locked. You cannot come out of that policy even if you want to. Is there a lock-in period? Is there any penalty if I want to come out of it? If I want to stop paying the premium, I cannot pay it anymore, or for whatever reason, will I be penalized? All policies come with all these explanations. Ask for it. Otherwise, the person selling usually would not be volunteering all this. What happens? Point 4 again is the same. What happens if I stop paying premiums? And point 5 is very important. Can I get similar benefits with a better product? This person who's selling, an agent, would not be telling you, but your advisor, your trusted person in the family, would be able to figure it out. What are the alternative investments options you have for getting the same mileage? So basically, ask questions. Do not be just silent observer to the process, because it's your money end of the day. So I'm putting 2 case studies here. One is of a mis-sell and one is of a smart investment. First one is a mis-selling example. There's this Mr. Sharma, 65 years, buys a 20-year policy as investment. Policy as investment means it has a component of insurance. It has a component of investment. He sees, as is traditionally seen, that I'll get my money. People don't want to lose money. Okay, if nothing happens to me, then money is gone. So I don't want that. I want some money to at least come back. This philosophy is what is working here. So he buys that. What happens in his case? He pays a very high premium. These products will always have a high premium. Low returns. If you see the return that you got from this 20-year policy, if actually somebody does the maths, takes care of inflation, and does it in a proper manner, the returns are minuscule. And it will have locked in funds. Listen, he could have bought term insurance and investment for better returns. Now, similar situation, another similar kind of scenario, like but a different approach, smarter approach. That is, Mrs. Ayak, 68, chooses of the money that she has, she divides into two parts. One part she uses for premium for a life insurance policy, term insurance policy, and another to invest in mutual funds for growth. So clear demarcation. When I'm looking for my growth, financial security, I'll go for mutual funds. What is the return? And if I want to see what will happen in my absence, I'll look at the insurance policy and keep it alive and update it. Outcome, she has a flexible investment with liquidity. She can come out anytime, she can sell anytime, use the money for any emergencies. And in case something happens to her, the family is taken care of by insurance policy, which is a cheap insurance policy, low priced insurance policy. So keep insurance and investment separate for better financial prudence. So basically, sum and substance is that understand the difference. Insurance is protection, investment is growth. This is a simple line, but it's not practiced at all. Be aware of mis-selling tactics. Ask questions and read the fine prints. Again, this doesn't happen because by the time the person has come in, you have already trusted him, and you have already decided that you're going to buy what he's going to sell you because of whatever reasons. This kind of is sometimes people feel awkward to ask questions. Don't just go and straight ask. And if you don't want to ask, you can go to Google. You can nowadays, for people who are digitally savvy, they can also check it online. Therefore, by following all this three, you can make smart, informed financial decisions. So that's the sum and substance. So insurance is not investment. It is not investment, and stay smart. So I rest my case and over to Vanessa.
Yeah. So you can have questions. Mr. Carr will be able to answer
I
the
just hope
question.
there are not questions. That means you have had a wonderful financial managed life. I want it to stay that way. You should not be facing problems.
Good evening, sir.
Good evening,
I
Mr.
am Sir
Sharma.
Jagdeep Sharma. Sir, what you have told, I agree with what you have presented out. It was very good presentation by your side. But what I feel in some of the product, I have got 38 years of marketing and training experience from LIC of India.
Mm.
I have been 38 years in marketing and training. What I feel that mis-selling is there, no doubt in that. But as you have told us, there are no guaranteed returns. I agree with it. But in some products of the LIC, there are guaranteed returns. It is written on the policy document as per the Indian Stamping Act 1882 and LIC Act 1956 and IRD Act 1999. Or only one policy, not all policies. In some policies, it is written that you will get 8% of the sum assured. Not in all, but in some of the policies, the guaranteed returns are there, like in Jeevan Utsav and Jeevan Umang policies of LIC of India. That I wanted to add, sir.
Fantastic, Mr.
Thank you.
Sharma. I take your point. But my purpose of saying that those guaranteed returns will be low, not those fancy returns of stock market price, because the
That is not
policies
there.
that you mentioned, they'll be investing in government securities and giving back money from those investments. These are reasonable returns, good returns, but not those fancy ones which divert the attention of the investor into buying into a wrong product. I agree with you.
Okay. Thank you, sir. This I wanted to add, sir.
No,
Thank
absolutely, you are right.
you.
And
Thank you.
LIC itself seldom sells through banks.
We have got very minuscule share in bank assurance. I have been in bank assurance for 3 years, but the banks are having targets, and there is a pressure on the banks on the every
Yeah,
fortnight.
yeah, yeah. You cannot blame an individual. It's the structure.
It's a structure because they promote only those banks are promoting those insurance companies who give them the high structures, high commission rates, high advances, etc., high prices, etc., to the higher managements. That's why LIC is not able to afford that.
Yeah.
Hmm. Thank you, sir.
Absolutely, I take your point. Yes, Mr. Bagji.
One very common technique of misselling is emotional appeal. Uh, we had a gentleman from a bank. mm, We have put some good amount of money over there because the returns were good. Interest rate is good. When that man, by the way, all banks, they call them customer relations manager. They're really sales managers. They're only customer relations. If you ask them for a problem with their account, they don't solve it. They're there to first. Then they came, and I have some knowledge about securities and all that because in the United States I have a Section 6 license. So, and also for insurance, Section 63. So I can discern what is what. And I did my study of the Indian market, and I found some ones are better than others. They came and strongly suggested Franklin Templeton uh, insurance company, various products. And I went and found that their performance has been good, not for recently, but for long term. That means they have not managed well, not just medium term, 3 months, 3 years, long term. So I said, no, they're bad. This is the return. I showed them. The last thing is, when he brought his boss, and they pressurized us. And lastly, he says that if I was selling my father, this is the product I would advise him. Because he was young, I'm older, so appeal to that. Now we thought, okay, all right. So we took that. And guess what? Within a few months, you know what happened to Franklin Templeton?
Did
know
you,
what
sir,
happened?
did you buy it thinking that it's an insurance
No.
No, it wasn't insurance.
as an
Basically,
investment option?
it was an investment option. But thing is, Franklin Templeton, lot of people who are in for aggressive and those fancy returns go for it. We specifically said we don't want any aggressive returns. We are very happy with our safe returns because whatever we have,
Okay.
by God's grace, that's enough for us. We don't want it.
Don't. Later on, when we went and checked with them, I complained. They said, but you have listed as you prefer aggressive growth. I said, no, we did say that. Yes, it says that in your form. You prefer aggressive growth investments.
It's really sad scenario. Not everybody is doing it, but some shortcuts people are taking. It's creating a headache for everybody.
And after that, when we called and called and called it down to turning back for telephone calls.
It's very sad to hear this from the coming from the fraternity. It's very sad to hear this.
What
Sandeep?
about annuities?
Sorry.
Annuities basically means cash flow in a fixed time horizons will be coming to you. It is not bad, but the point is, what product are you buying? Are you buying what you are thinking you are buying? Transparency should be there.
Yes.
Annuities are good, but don't buy insurance. Insurances should not be having annuities because insurance should be you are only paying premium. Something happens to you, you
Yes.
get money. Getting return on your investment on premiums is a dicey.
They sell the annuity. The recently happened, selling an annuity stating that, but if something happens, you get full money back. I said, that's an actuarial product. It's insurance. No, it's not an actual product, it's an investment. As if you insure it in case of my death or something happens, I get full money back. That can happen only in insurance. So part of my premium is going for cost of insurance. Part of my premium is going for administrative cost, in addition to part of it for profit. So only so much is left for the investment. Obviously, the return will be low.
Yeah, you've got that is the thing. That's the maths.
Sir, may I request you to now minimize the screen so that we can see the bigger pictures of the
Sure,
participants?
sure. So I'll stop share. Huh?
Yeah,
Yeah, you can stop the screen share.
presentation. Yeah, then now it gives a bigger picture.
Sorry. Yeah. Things
Yeah,
have
more
changed so
questions?
much, and regulatory is coming down very strongly on all participants who are It's right now the gentleman who spoke from LIC, he is in training, and he said the right thing. It's a structural issue. You cannot blame one person. It's structure. I mean, running after profits and going after gullible individuals. Banking is to do with trust. Always, that's the cornerstone of banking. And one doesn't usually change banks so often the way it is done nowadays. That is also very different from what it used to be. Otherwise, earlier, if a banker saying something means it's like the final word. But now you have to ask question, find out. It's a very sorry state of affairs.
So
But
the
regulatory is catching on to it fast. Let's hope you all also be careful with your money. Yes, please. Somebody is asking something.
Anup sir, Nanuji, some questions?
Yeah, I was Sandeep. I want to share with you when I was younger and I was still working. I had bought a policy. It was around ₹1,50,000 a year. It was a 10-year policy, but the premium payment was for 5 years. So
Yes.
I did that and I got a good return. But I don't think that policy is going to, be attractive to me today. I'm 73. So I don't think I see a horizon of 10 years from now. So I'm okay, I think. And plus the fact that I used to get an income tax benefit on the premium paid while I was having a regular income from the organization.
Yeah.
I would
So your
claim it.
objective was to get that return, which you got. Markets were
Yeah.
good. God was kind, and you had a smile on
Correct.
your face with the returns.
Correct.
But
because
very good to hear this. Yeah.
yeah, because when you are young,
Sandeep,
your
this
cost of
I
insurance is very
got
low.
a policy from LIC. Earlier, I had that policy which used to give me a return every. I think after every year something was coming, but then I got into a policy of LIC in 2012, and I give every year an amount of round about 49,000 something amount every year. And I see that the returns don't come now yearly, even after 5, 7 years. But at the final, the policy is closing on 2027-28. So I was thinking to stop it or continue. I think this was a policy, one of those old policy which is not beneficial to me.
Best thing under circumstance is to either ask your agent to give you the full policy feature. Go through
Hmm.
the policy feature and see how much you stand to gain from now and what is the situation before taking a final decision.
Okay.
Go to the. It's very important to go through the features. But again,
Okay.
it's you're getting money, again, money and insurance both.
Hmm.
So they will have their issues on return.
Yeah. So
Okay.
But you have
may,
almost continued so many years. I suggest you ask your agent to give you the entire fine print, exactly where you stand today. Sometimes they
Hmm.
have a. Is it still a premium paying tenure
Yeah,
or
yeah.
premium?
I have to pay for the 2025 and
Okay.
2026 again.
So then just ask them this situation which I put in the slide, that today if
Hmm.
I stop paying the premium, how much money will I get? What is the mathematics? Then you
Okay.
take a decision. Don't take it abruptly.
Okay. Okay. Okay.
Because sometimes they have this penalty and
Yeah.
whatever money you have paid, then you get a deduction on that.
Yes.
Since Anup, you are so close to the end of the policy period, I suggest you continue paying in the 2 years and then they can't, zip us of the benefits once the 15 years premium paying period is over. You will
Hmm.
get your money back.
No, the insurance amount is also 10 lakhs only.
Yeah,
Okay.
because it's a mix of insurance and investment. And
So
none of you, I believe, would be having a pure life. Do any of you have a pure life? There is no money back. If something happens, you get money. Have any of you bought this product or heard of this product? It comes at a very cheap rate.
no,
Nobody buys it. Nobody talks about it. Insurance agents also do not push it because I think everything is more or less crystal clear. Whoever has lost money now. Nothing can be done about it. But any future investments, future decisions you take, or of your children or of your grandchildren, keep this in mind. It's very important.
See, Sandeep, this advice of yours applies to 3 times older people like
It
me.
applies to everybody. It applies to
Everybody.
who knows,
See, like,
nowadays you cannot say a younger person uh, has a larger lifespan and elderly do not. I mean, things have changed because of medicines and everything. That logic doesn't work anymore. That senior citizen only needs to buy short term and youngers can see their visible horizon. There is no visibility, nothing. It's very uncertain. It's all destiny.
basically, I'm talking about investing in mutual funds because I've realized that whenever the market has, like 2008 onwards, when the market crashed and things like that, it goes down, there is a panic, and those people who panicked, they sold off and they liquidated their stuff. They are regretting. Now, those who remained invested, the market has gone way higher.
Yeah.
This has been the trend. Every time the market crashes, it goes up to a
Yes.
level, never before kind of a thing.
Yes. Yes.
So it's always, like I always say, my father used to say, 2 ways of breaking the waves in the sea. One is that you stand erect, and the wave hits you and you are thrown on the shore. The other one is to duck, let the water flow over you. I find the investment market the second one. If
Yes.
things happen like that, just remain calm
Yes.
and things will get better.
Yes.
I believe in that.
Yes, the sometimes mistakes happen when you try to put your daily use money, that is you need next month for some particular, you put it into this mutual fund, then you need to pull it back irrespective of the moment, then you have a problem. Keep
Well,
money
nobody
which you can
does
set
that.
aside. Yeah, set aside
Age
and
also gives you certain wisdom. So
sudden
nobody does
wisdom. Yeah,
that.
absolutely. And always keep your nominees. Mention a
Of
nominee in your
course.
all
Yes.
mutual funds. They are a winner. The other tragedy is that most of us have hard instinct. When we see markets coming down, newspaper reports, television reports, we panic and say, okay, markets are down, let's sell. And when markets are up, we hear everybody, oh, markets are up, let's buy. It should be just the opposite.
For your information, I have done exactly that. Now that the
Okay.
market is coming down, I have
Bye.
taken out money from other investments and put them into mutual fund.
Yes. As
My
long
number of
as
units are more.
Yes, as long as the new leader in the world order is keep on making statements, markets will be panicking and good opportunity to buy.
Correct.
So
If the world comes to an end, मेरे क्या फर्क पड़ेगा मेरा investment का यार?
absolutely, a right philosophy, sir. Ekdam right philosophy. Absolutely, absolutely.
It's actually, going reverse. If people are crying, you should
Yeah.
be dancing.
Yes.
And if people are dancing, you should be keeping quiet in your blanket.
Yes. 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 Only when the
And
moment comes with so much of news, it's people panic. I understand that is there.
okay, Mr. Anup asked this question to Mr. Kar. Fine, his answer is acceptable. But if this question was asked to me, Anup sir,
Is there?
Yeah, I'm
Anup sir,
listening to you.
yeah,
I'm listening to
if this question was asked to me,
you.
I will say a recommendation by the experts is your equity investment should be 100 minus your age.
That's a lovely way to
Thumb.
put it.
That's a rule of thumb.
Yes, sir. And then by this formula, they told me when I crossed 50 that now you have to stop reduce it. I said, Baba, when I was 25, there was no equity. When I was 35, there was no equity. I started only at 40. Now you forget. I go the reverse way. People start at, they say they should start at very high equity percentage at 25 and reduce slowly. I am a reverse person. So did not change.
Contrarian. Contrarian.
Yes, sir.
You are a contrarian.
Contrarian. Ulta rasta.
And it
Yes.
is
Reverse.
beneficial. It is very rewarding.
No, I had this case of a doctor this week only was speaking to me regarding this and a large portfolio wanted to rebalance and all. So I was telling him that I assume he was 64 or 65. I said, I assume you would be risk averse, so you need something very defensive, not very aggressive. He said, no. Life's ahead of me, life's in front of me. I'm not worried. So give me the aggressive ones. I'm okay to take risk. I don't mind taking risk. I was surprised, but things are changing. And it's good.
Yeah.
They are the way. Every household, every person has a different approach to risk taking.
Yeah.
There's no one size fits all.
Yes.
Vanessa, sir, I think we have
Yeah,
come.
like you said, she should go for a long term. Nanuji also she should go for a long term. I put it differently. You start putting and be those Bapu ke bandir, Bapu ka bandar. Don't listen, don't see, don't smell.
Yes,
What is coming in the newspaper? What is coming on the TV? Just blink it.
just robotic
Don't
way,
listen to
just
them for
repeat
10
the
years.
process.
Just
Yes,
listen.
yes,
Don't
yes.
listen to them for 10 years, and then you are there.
True.
Absolutely.
So if
And
everything is done and no more questions, I think we come
Yeah,
to
yeah.
the end of this session.
Yes.
Thank you very much. We will continue bringing such topics which are of great interest for all of us. Wonderful. Have a wonderful night,
Thank you so
and come
much.
back tomorrow again to the Adda at 5 o'clock.
Mhm.
thank you,
Bye.
Sandeep.
Thank you.
It was,
Thank
Thank you
you,
it was
sir.
very much.
really
Thank you
good
so much.
talking about it. And this is the only thing that, I just wanted to mention that had I been younger and learned the power of compounding,
Oh, yeah.
I would have been a much richer person today. Nobody
Okay.
told us those days,
Yeah,
small savings
that's
every
another area.
month.
Compounding. Yes, yes, absolutely, absolutely. Don't worry,
And
sir. The youngsters nowadays, they hear about compounding, but they fall for all these tricks, so they're not gaining anyway. So
okay.
you are in good shape.
Older people fall for it even more. And I have got
Ah,
a very good strategy. When any banker comes to me, gives me these various schemes, 13% guaranteed returns. What
oh,
more
Okay.
do you want? Kahan milega aapko? I tell them, ठीक है, you leave all the documents, you leave all the brochures with me. I have got 2 advisors and I am going to ask them. So, who are your advisors? I said, I have a son who works with a lot of banks. And I have my daughter-in-law who is working with American Express. And I'm going to consult both of them. And then after that, I will get back to you. मुंह इतना लटक जाता है, like a
oh,
law.
immediately.
क्या बोल
That's a
रही हूँ?
good trick.
And guess what? My daughter-in-law's parents don't listen to her.
Oh,
No, they don't listen to her. So they go and buy any product, these kinds of products. And then, then when these people go and scream and say, why did you buy this? This is terrible. So then they say that they go and apologize to the banker. Please forgive them. बहुत ये young बच्चे ऐसे करके बात करते हैं. Sorry, we are very sorry.
oh,
So constantly I'm hearing, oh, they got cheated here, they got cheated there. So I was telling them
that's
that
so sad.
when I get a call, the first person I ask, so they said, who? I said, your daughter.
Okay.
I call her up and ask her, beta, this is the product. And she immediately tells me, no, don't go for this. This is not going to help you. So they said, "Aap usse baat karte ho?" I said, yeah. They're from Chandigarh too, so I remember.
Ah, okay.
So
you have a Chandigarh Kolkata connection as well.
yes, absolutely. Absolutely.
No, same here. I started inculcating this habit when my daughter started job. Elder one, now it is, I think, close to 10 years, having started her job. The younger one, maybe 7 years. So they both have their portfolio.
Nice.
And I do a check on the portfolio every year or 6 months, advise them, ye change
Super.
karo, ye karo, ye karo. And if you have to do anything, ask me. Challenge me why.
Lovely.
And now
In
sometimes
terms
they are
of,
able to give me arguments. Sometimes they are able to now they have learned it.
I think in terms of investing and growing money, our children have better parents than we had.
Ah,
Absolutely.
Our
Absolutely.
parents didn't have a.
Thank you very
thank you
much.
so much. Thanks, all of you.
Thank
Bye.
you
Okay.
and good night, everybody.
Good night.
Yeah, good night.
Thank
Shabak
you.
khair.
Good night.
Good night.